Welcome back to Amazing Simplified, amazing business owner. So good to have you here. I'm so glad you stopped by today. You are here. If this is your first time, you're in the right place. This channel is all about simplifying accounting so that you can understand your business finances and grow with confidence. And if you're one of our returning subscribers, thank you so much for your continued support. I truly appreciate. You already know that will make accounting easy, practical, and stress-free. Now, Accounting Simplified is all about breaking down core accounting principles. This is for my new viewers, just for you to be notified. It's all about breaking down accounting principles in very easy peasy, clear, simple way you can apply it in your business. In this channel, you will understand the basics of accounting without confusion and no jargons. You understand how to track your income and expenses correctly. You would know how to keep your books organized and accurate. You would also know how to make smarter and better decisions. If you have not watched my previous video on proving strategies for business owner, please make sure to check it out. It's packed with real tips to help you grow your business base and boost profit. We're all about the money. Don't forget to watch, like, subscribe, and also comment so that we can know that yes, we are giving value to you. Watch out for my new video which will be coming up very soon. I'll be talking about profit and loss account, so just stay right in. Alright, before we continue, I'd like to say a very big shout out to all my subscribers. I love you. Thank you so much for your support. Wow, as you they add tepe, as you they add water for my soil, and so we're going to bless you. Your Gary, nobody will put sand in your Gary. Your business is blessed. Everything you do, you shall prosper. In fact, whatever you lay your hands to be going through, no heal, no attack, no blockade. You understand? Because you follow me now, so God will bless you. Your business going to go higher and higher. Subscribers, na do. Now be the correct subscriber waiting for town. I beg, I dey hail you. In fact, three Boza fauna. Boza 1, Boza 2, Boza 3. And if in case you're one of my American subscribers, thank you so much. I love you, love you, love you. Okay. Alright, so welcome back. Today we're talking about profit and loss accounts for small business owners and entrepreneurs. If you've ever wondered how much profit your business is really making or where your money is going, then this is the video for you. Today, I'll be breaking down profit and loss accounts, also known as the income statement, in a very simple way so that you can record and as a business owner know your profit and loss at the end of the month. Now, this video will contain no accounting jargons, just clear and practical steps straight up that you can use the right way. By the end of this video, you will learn how to prepare your basic profit and loss account, how to identify your income and expenses, how to calculate your net profit, and use this information to grow your business widely. So grab your notebook because this video would help you understand your business performance like never before. Don't forget to help baby girl. Don't forget to like, subscribe, share, turn the notification bell, do all this loving stuff so you don't miss more accounting tips designed just for you, my business owner. Now let's dive into the P&L account and see how it works step by step. Alright, let's jump right into our topic for today, profit and loss accounts. Now, this is also known as your income statement. When I say income, I mean money coming into your account. So maybe we can just call this sales and expense accounts. But the right word is profit and loss. Now, what is profit? A business is said to be making profit when your total expense, when I say expenses, I mean the total money you incurred, the cost you incurred to run that business. Say, for instance, you bought a shop, for instance. So that amount of money you used to purchase that shop is your what? Rental cost. Are we together? Now, you're going to record that rental cost. Now, in your shop, you have lights, right? And you purchase and you pay NEPA bill every month. Now, those NEPA bill you pay is going to make up your what? EEDC bill or light bill, as the case may be. Now, you also have a place where you can wash up, go to the restroom, and I want to assume that you buy water. Now, if you buy water or you pay water bill, that cost you incur to pay water bill is also what? An expenses. Now, if you pay transport, which is normal, to buy your product, you go to the market, you pay transport, you take a bus or a cab, whatever it is you take to go to the market, buy your product, you take a bus to bring you back. Now, those is your transport, because all those transport costs you incur for you to buy your products and bring them to your shop, or the money you incur to deliver the product to your client, all this cost will make up your what? Transport cost and delivery cost. Now, if you have a staff that you pay, maybe a cleaner that cleans your shop or cleans your place, and you pay a monthly salary, now that salary is also part of your what? Your cost for maintaining your shop. So what I'm trying to say in essence is every cost you incur for you to run your business smoothly, you must account for it. You must record it. You must have a write-up where you have it recorded. And it must be accurate. And that is why accurate record keeping is extremely essential for you to be able to determine your profits and loss. For you to say, okay, yes, I'm making profit. Most people are in business and they can't say they're making profit or loss. They know they're making sales, yes. Every day I sold to maybe 1 million customers, but are you making profit? That is the thing. It's not making sales. Making sales is the first step to making profit. But for you to be able to determine if you are truly making profit, you must keep a record of all your expenses. Every single expense you incur, you must keep a record of it, and not just a record, an accurate record. And that is why I talked about keeping record in my earlier classes. If you've not watched that video, please check it out and see how you can keep record of your daily transaction, be it your purchases, be it your salary, be it your EDCB, be it your water bill. All those expenses you incur to run your business must be recorded accurately, because if they aren't recorded accurately, you cannot actually say if you're making profit or loss. So as a business owner, you must know your numbers. You must be careful when keeping record of all your expenses and also cash inflows. When I say inflows, I mean money you earn as a result of selling your product. Are we together? So record keeping is accurate because you're there to make profit. And the only way you can say you're making profit is if you have kept records. If there are no records, you cannot say you are making profit in your business or making loss. Most people just make sales. They say, yes, I made 10 million sales today. I sold to 10 million customers. Are you making profit? That is the question you should be asking yourself. And you should be able to do that for yourself as a business owner. If perhaps you cannot hire an accountant to help you record the transaction accurately, you as a business owner should be able to do that recording while the business is your business. The business is what? It's your business. You're there to make profit. You're not there to just make sales. No. That is not the objective why you opened up a store. You opened up a store because you wanted to make money. And the only way you can decide or determine if you're making money, if you're making profit, that is the word, is when you're able to keep accurate record. That is the first step. So you must keep record of every single expense you incur. in running that business. Like I said earlier on, salary, light cost, whatever it is, you pay SOMA cost, any cost you incur. As long as it's not you bringing in money, instead of spending money, you should have that recorded as an expense. Even food bill, yes, you're in your shop, you spend money to buy food, you should record it on a daily basis. At the end of the month, you know how much have I spent paying for the food I eat? How much have I spent paying on drinks? How much have I spent on the NEPA bill? How much have I spent on Go TV? How much have I spent on DSTV? How much have I spent making calls? How much have I spent advertising my product? These are all the expenses you must record accurately on a daily basis or a monthly basis, as the case may be, to enable you to determine if you're making profit or loss. So no record keeping, no determination of your profit or loss. So you must be very, very accurate. You must be very, very serious minded when you're recording your business transaction, so that you can determine if you're actually making profit. That is the whole reason for the whole hassle of recording your business. It's not because you're jobless. No, it's because you want to know if I'm really making profit in this business I call business or not. Except you're running a charity organization and then you don't really care. But even if you're running a charity organization, they do care, I think. At least I know some non-governmental organization, they want to care, because if you're not making some kind of profit, maybe not high profit, but at least you're making profit, so that you can keep the business moving. Because if you're not making profit, how can you keep the business moving? How can you assure yourself that next month you're able to have enough money to buy more stock for your shop? If you're not able to recover the cost you've incurred in the previous month, how are you going to get the money to buy new product for the next month? So accurate record keeping cannot be overlooked, cannot be emphasized, cannot be overemphasized. It's extremely important. So you must keep accurate record of all your transactions. Everything that leads to money leaving your pocket out of the business is what? An expense. You hear me? Every cost you incur, everything that leads to you taking money out of your money, out of your pocket, and the money leaves your business is an expense. The money you use to purchase the product is an expense. We call that what? Purchases. Are we together? Purchases. The money you use to pay for the rent when you're shopping, that's called what? Rental cost. Are we together? The money you pay for your salary, to pay your staff that work for you, is called what? Salary. As the case may be, you can call it welfare, you can call it staff cost. Are we together? So everything that leads to you spending money out of your pocket is an expense. Are we together? So as simple as that. So every expense you've incurred, everything that led to a cash outflow, everything that have led you to spending money, instead of receiving money, you have spent money, is what? An expense. And why are you spending that money? So that you can keep your business going. So any expense you incur for the purpose of the business is an expense. Properly put, it's a business expense. The expense you incur to make your hair is not a business expense, because without your hair being done, you could still be in the shop and sell your product. Except you're in a business where looking good is important. And really, looking good is important, because if I were to come to a shop to buy something, well, whether the person's hair is made or it's not a reason for me not to buy your product. As long as you look good and your hair is well kept, even if you just packed it, it's okay. So making your hair is not part of your business expense. As a case, that's a personal expense, and not keep expense for you, which should not be part of the business money. We'll come to it in our next video when we talk about personal expenses and business expenses. But for purpose of this class, I'm giving this explanation. In my future videos, I'm going to give you a deeper explanation of business expenses and personal expenses. So personal expenses should not be part of your business expense. You don't add the money you spend to make your hair, the money you spend to buy your clothes, as part of the business expense. No, you don't do that, baby girl. You don't. If perhaps you do that, then you're recording your problem, you're recording your expenses wrongly. Only the expense you incur in order for you to run the business are your business expenses. And that's the expenses we're talking about when we want to know our profit or our loss in our business. Are we together? Hope I'm not too fast. If I am, please kindly slow the video and play back so that you can get every single information I'm downloading to you. Are we together? So this is what makes up your expenses. Now, after you have recorded these expenses properly, on a daily basis or on a monthly basis as it applies. Some expenses will be incurred every day, some will be incurred monthly. But the most important thing is that it is being recorded in a book. And it is recorded what? Accurately. Are we together? Now, when you get all the expenses you spent for a period month, are we together? You're going to sum up all those expenses. And then you have the total figure. Are we together? Now, you also have to know how much money has come into my business. As a result of the sales I have made, how much money have I received? That is your sales. Are we together? Anybody that comes to your shop and buys your product and gives you cash for it, be it physical cash, be it via bank transfer, be it via POS, whatever the case of transfer is, as long as it translates to you receiving money from that person, that is a sales. Now, every single sale you have made for a period, and that is why accurate record keeping of your sales is extremely important. And I've taught you how to record your sales, both your cash sales and your credit sales. If you've not watched that video, please check in the description box up. You will see the link above so that you can watch and see how to record. And that is why if you're my new subscribers, I welcome you. I love you, but I want your business to go. And I'm advising you, I want a business to grow. I'm advising you to make our time, watch my previous video on sales day book, sales purchase day book, sales day book, sales cash book, purchase cash book, and credit purchase book. So you can know how to record this transaction properly. They are very easy peasy, no stress. I love to give my client no stress accounting strategy because running a business on yourself is really stressful. So anything that will make your life easy is what I'm here to do. Are we together? So in those previous videos, I lay down simple formats. Without having accounting knowledge, you should be able to record the transaction. But if perhaps you can hire an accountant, that is fine. But if you cannot, you're a new startup, you should know how to record the transaction. Because you cannot tell me you're in business and you're keeping no record. That is a big strategy for a downfall in your business. Most people have businesses and they have no single record of what is happening. All they know is that they're making sales. Mr. A comes and buys and he gives you money, you put it in your cash drawer. But every expense you're incurring, no record of it. Every money you receive every day, you don't have it written down somewhere. The fact that you receive money from a customer and you don't have it written down somewhere is not good. I want to encourage you from today, begin to record every business, every sale you make. As the customer is paying for the product, once he or she goes, you should write it down. And if perhaps your shop is too busy, that is why you have a receipt booklet. A receipt booklet will make your work so much easy because that receipt will have the name of the customer, the quantity of goods purchased, whether it was paid via cash or is on credit, and the amount. Whether the person paid full payment or part payment and the balance. All those things will be there in that receipt. At the end of the purchase at the end of the sale for that day, you get that receipt booklet. And then begin to write it down in your sales day book. Line by line. Using the format I've taught you. If you do that every day, you're able to know how much sales you have made. And then you now confirm if the sales you have actually equals the amount of cash in your bank account and the amount of credit you expect from your customers, because most times you have customers, some pay, some might not pay. So total amount of money you received from the customers, both those that paid cash and those that are owing you, should be equal to your total sales. That is like a guide to make you know, yes, am I correct? Say for instance, you sold 10 products. Out of those 10 products you sold, 5 you're on credit, 5 the person paid it by cash. Now, if each product costs 10 naira, for instance, it means that I'm going to have 10 times 5 for the cash purchase, which is 15 naira, and 10 times 5, which is 15 naira for the what? Credit purchase. Now, in my book, I should have credit sales. In my book, I should have credit sales 50, cash sales 50, total sales 100. And I should be able to check in my drawer how much I have. If I have 15 naira, it means I'm correct because I have a cash sales of 15 naira. And in my book, I have a credit sales of what? 15 naira, so I'm correct. Sometimes you can make mistakes, and that is why you should always write your records. It's going to help you check if what you have in your cash at hand equals both cash at bank and then credit sales. Are we together? Now, that is for your sales. Now, when you add up all your sales and deduct the sales you've made for the period from your expenses, are we together? You will now get your profit. That is sales less your expenses. If you're getting value, sales less expenses, that will give you profit. If you're getting value for this video, please kindly like, share, and subscribe. I know this video is long, but it's worth it. Just stay to the end, we'll soon be done. At least by the time you're done with this video, you know how to record and determine your profit and loss, which is very, very important for you, for your business. Do not neglect this video. I want to encourage you to just keep watching. We'll almost be done. This is the part 1 of the video, but I have a part 2, which I'm thinking of adding to this video so that we'll just be done with it once and for all. So just exercise patience and keep watching. In the next few minutes, we'll be done. And by the time you're done with this video, you know, okay, yes, I can boldly prepare my profit and loss. I can know that my profit and loss, I can prepare my profit and loss account and know that my business is making profit or loss. See, the time you're watching this video is not a waste of time. Just keep on, hang on, we'll soon be done. Thank you. Now, this is the continuation. Alright, so let's continue. Now, there are 2 main types of profit when talking about your profit and loss account. Like for simplification, I'll call it sales and expense account, or just call it profit and loss account, because the aim is not making profit or loss. That's the whole objective. Are we together? Now, there are 2 types of profit in business. You have your gross profit, and you also have your net profit. Now, your gross profit is the profit you can say you've made after considering 2 items. Number 1 item is your sales, which is what is going to determine the inflow of money. That is the sales you have made. Are we together? And then the next expense we're considering is your purchases. Purchases is the money you spend to buy the stock for your product. So if, for instance, you're into baby products, you sell baby shoes, baby bags, diapers, Cerelac, that is the business you're doing. The amount of money you incur to buy all these baby products would make your what? Purchases. Will make up your what? Purchases. Now, for instance, if you're starting a new business, so let's say you're a startup, you're into baby products, and then I'm into baby products, and then I spent 10 million naira buying baby bags, shoes, diapers, whatever baby item I purchased. I spent how much? 10 million naira. That is my what? Purchases. Now, because I want to determine my gross profit, which is the first profit Now, what is gross profit? Let me explain that properly. Gross profit is the profit you get, or the profit you can say you have made, when you deduction means subtraction. For a common layman, we don't use jargons here. Our logo here is simplification. So when you subtract or when you minus your purchases from your sales. So let's say at the end of the month, you noticed that you have sold almost all your products. And then you've been keeping accurate record of every daily sales you made. Example, I'm giving an instance. And let's say at the end of the month, you had sold, what you have from your recordings is 15 million naira. That is your sales, right? Now, if that is your sales, because this is the first time you're starting up this business, what I would do is this. At the end of that month, after getting my sales figure, how much I sold, we said we get the instance of 15 million naira. I will look at my stock book and say, okay, the goods I bought for the month was how much? 10 million, and that is my purchases. And like I said, I've not sold all of them, but I've sold, say, 3/4 of those products. Are we together? And then I still have some stock left here and there. And the stock that I have left in my books from my shelf, if I calculate it based on the cost of purchase, how much I bought it then, let's say the cost of all the unsold products in my shop at the end of the month is, say, 2.5 million naira. That is the value of the unsold stock I have. I've not sold this one, right? So the purchases I have sold so far then will be 7.5 million. Since the total purchases I made at the beginning of the month was about 10 million. Are we together? I made 10 million. I used 10 million to buy all the baby items I purchased. And then from my recording, I have 15 million as the sales that I've made. So I will now have my sales of 15 million minus 7.5 million worth of goods I have sold so far. If I subtract that, that is 15 million minus 7.5 million. I'll be left with what? 7.5 million. Now, this 7.5 million is what? Is my gross profits. So for simplification, which is our logo in this channel, I can call this profits from goods, because I was able to obtain this profit after I deducted my purchases. That is the actual good I have sold, not purchases now, the actual goods I have sold. That's the word. Actual goods sold from the amount of money I made from the sales. Are we together? I hope it's not confusing. Let me say that again. The actual goods I have sold, which is 7.5 million, I deducted that amount from the sales of 15 million. And I have what? 7.5 million as my profit from goods sold. We are all about simplification. That is why I changed the name from gross profit to profit from goods sold. Now, this is the first profit of the business. Are we together? Now, from this gross profit, from this profit from goods sold, that's what I should be using now. You now get every other expense you've incurred for the month. Every other expense you incurred enabled you to run that business, like I said earlier on. Lights, entertainment costs, which include your food, welfare costs, stationery costs. Maybe you bought some stationery to enable you print, salary, NEPA bill, water bill, every other expense you incurred that enabled you to run your business will come as what? Other expenses. There's a particular terminology for it, but I don't want to bore us with jargon because we don't need jargons. We're about what? Simplifying our lives. So we'll leave all the jargons alone. We'll just call those things other business expenses. That is what we're going to call it. Other business expenses. So I will add up all these other business expenses, which I'm going to list them. Light bill, water bill, salary, whatever. All those expenses I've incurred for the month. I will now add them all up together. For the month, we are doing this statement for what? The month. We want to know how much profit have I made at the end of month 1. You want to know how much you've earned at the end of what? Month 1. So let's assume that all these other expenses you've incurred, the total sum is what? 4 million naira. That is the total cost you've incurred for all these other business expenses. You will now subtract 4 million naira from 7.5 million naira. We'll be left with what? 3.5 million naira. Now, this 3.5 million naira is the actual profit. Let's call this actual profit. If I use accounting terminology, I'll call this what? Net profit. But we don't want all those jargons. We don't need it. We want what? Simplification. So I'll call this what? Actual profit. I have a small cough. So these are the two profits you would require to calculate for your business. Your profit from goods sold, profit 1, and then profit 2, your actual profit. It's very important to break this down so you know how much you have made from the goods you sold. Because as a result of the goods you have sold or the goods you purchased, you're able to make sales. So you must be able to know how much profit have I made from the business first of all, before you now deduct other business expenses. That is the procedure. You don't jump and then get the expenses from every other expenses, from light, from water, from salary, and then deduct that from your sales. And then after that, you now want to deduct the balancing figure. That is the balance that you have there, or the figure you have as a result of your subtraction. Deduct it now from your actual, from the goods sold. No, that is a no. No. So the proper way to do it is that first of all, you get all the stocks you have sold. You know how much you have sold those products, how much you purchased them at the point of purchase. You know how much quantity of products you have sold. You get that quantity of product you have sold. You now deduct the actual sales you made from what you have sold. Or rather, you deduct the sales you have made, that is the goods you have sold, using their purchase price from from the sales you have made. Sorry, let me not confuse you. You get the total number of products you have sold. You get their purchase price. How much did I buy them from? You get that amount of money. Mind if you're doing a daily recording of it. So that daily recording of your purchases, it must have been a one-time or a two-time, depending on how many times you went to the market to buy. But those goods you bought, you know how much you have sold so far. You multiply the purchase price. Let's say you bought it, each was at maybe one naira, for instance. Or let's say since you are a million, let's just say each cost you 1,000 naira, for instance. And we together, and then you sold. Let's divide this by 1,000 to know how much products we have. So let's say the quantity of product I've sold 7,500. That's the quantity of what I've sold. And at the point of purchase, I bought them from the supplier at 1,000 naira each. So if I multiply 1,000 times 75 times 7,500, because I've counted how much stock I have left. Let's say I bought the total stock I had in my shop was, say, 10,000 stock. Now you have gone to count how much do you have, how many quantity of stock do you have at the end of the month. You have what? 2,500 left. If I have 2,500 left, it means I've sold what? 7,500. Someone asked me how. Simple. 10,000, which is the total number of quantity of stocks you had the first time, less it, deduct it from what you have balanced, from the quantity of stock you have at the end of the month. If you have 2,500 as the quantity of stock left, you deduct that figure from 10,000. You have what? 7,500. That is the total stock you have sold so far. You now multiply 10,000. You now multiply 7,500. I mean to say, that is 10,000 minus 25. I give you 7,500. You now multiply 75 times 1,000. That was the purchase price. Are we together? That will give you 7,500,000 naira. That is the cost of goods you have sold. You now deduct this 7,500,000 from 15 million naira, which is your sales. You now have what? 7,500,000 naira as your profit from goods sold. Are we together? If you feel I'm fast, please recap, take your time, go to the video again, and don't forget to like and share and subscribe if you're getting value for your time. So after you deduct this figure, you now have what? 7.5 million naira. That is your profit from goods sold. You now deduct every other expense that you have incurred for the month. Mind you, some expenses you cannot get the figure for the month except you divide it by 12. Like for instance, your rental cost. If the rent of your shop for the year, most rents are done yearly or 2 years. Now, if for instance you paid 1 million naira as the cost of your shop for the year, for you to determine the cost of the shop for the month, you divide that 1 million naira divided by 12. You're going to divide it by 12 to know how much is the cost per month. So it is with every other item you have paid for a year or 2 years, as the case may be. So any product you paid for a year, as the case may be, you divide the total cost, 1,000 as in the case of a rent, divided by 12. That will give you cost for a month. Or if you paid 1 million naira for 2 years, that will be 1 million divided by 24. That will give you what? The cost for what? 1 month. So that will help you know the cost per month. Every other item that is incurred per month, you add it up. But the point is that you must be consistent. You cannot say cost of 1 million naira and add it as your rent for the month. No. Because that 1 million naira is for the year, not for the month. And you want to know how much you have spent for the month. Are we together? So that's why you must divide it by 12 to know how much you have spent for the month. Hope I'm not too fast. If I am, I'm sorry. I'll try and slow down. Okay. So you now add up all these expenses and deduct them from your goods sold. Profit from goods sold. When you deduct it from it, you now get your actual profit. Are we together? This is how to determine your profit or loss. Like we say, for simplification, your sales and expense. But I think profit and loss is very easy terminology. It's not difficult jargon. So just say your profit for the year or loss for the year. Now you can make a profit or a loss if the total sales you have is more than your expenses put together. That will give you a profit. In the case of the example we are working with, you have 15 million naira less 7.5 million naira gave us 7.5 million naira less 4,000 naira. When I say less, I mean minus 4,000 naira will now give you what? 3.5 million naira. That is a profit. Wow, so much money. Now, if your expenses is more than your sales, you have made a loss. So if, for instance, another scenario, the sales you made for the month is what? 8 million naira only. And then The quantity of goods you have sold so far is what? 7.5, and that's the cost of the goods you have sold. Are we together? Now, by the time you deduct 7.5 million naira from 8 million naira, you have what? 500,000 naira. And if the other business expenses is what? 4 million naira, you have made a loss of what? 3.5 million naira. That is a loss. So you can make a profit in the business or a loss, and that is why you must keep record of your transactions. If, for instance, I don't have a record of this transaction, and I made a sales of 8 million naira, and my total cost of goods sold for the month is 7.5 million naira, I have just 500,000 naira as my profit from the business. I now take into account other expenses for the business, and I have 3.5 million naira. I'll know, wow, because you're making a what? Loss. Now, this clarification will guide me in making better decision. I will decide on how I can reduce my costs so that I can make more profit, or how I can increase my sales so I can make more profit. Because at that now I'm not even making profit, I'm making loss. So if I were the owner of this business and I find out I'm making a loss of 3.5 million, what would I do? I would find ways to minimize my expenses. How do I minimize my other expenses? How do I minimize my car, my light expenses? How do I minimize my transport expenses? I will think of how to minimize my expenses. And that will be one of our videos in our next class. How to minimize your expenses. Most people, they incur so much business expenses that are not necessary for the business. They are not what? Necessary. So that is why you must keep record and determine your profit and loss account, if possible, on a monthly basis. That would guide you. You begin to make the right step before it gets too late. Because if, for instance, I'm not keeping record, or I don't do this determination of my profit or loss for the end of the month, and I wait to the end of the year, and I continue with the same pattern of expenses, I will make so much loss that maybe by next year I might not be in business. God forbid that thing. Like I will all say, yes. But that is why you must keep record, so that you can prevent yourself from making these kind of mistakes. Most people start a business with so much money, and because they are not recording their transactions, they are not guided, they spend frivolously. They spend on things that are not necessary for the business. And then they're making expenses, they're making loss, but they don't know. Why? Because they're making sales. Yeah, making sales. My big brothers. I love you guys so much from my heart. So record keeping is extremely important. You must keep records so that you can guide yourself. It's for your own benefits. You're not helping anybody, you're helping only yourself. So keep record of your transaction. And you can now make decision, because I have kept record. I can see that there's a loss of 3.5 million naira at the beginning of just the first month. I would now realign myself and make decisions on how to reduce certain expenses that are not necessary in my business. So that next month, perhaps the loss I would make will be lower, maybe 1 million naira. Or I could make more profits. Are we together? So, record keeping cannot be overemphasized in a business. If you're in a business and you're not keeping records, you are on a way to the south. When I mean south, I mean you are on the way to maybe making losses in your business. So if you want to make profits in your business, one very important thing you must do is to keep record. And not just record, accurate record of all your expenses and all your what's inflow, so that you don't make mistake. You can now say, am I making profits? Are we together? I don't want the video to be so long. We have really spent quite a while in this business. But it's important that we understand exactly how to run our business so that we can make profits. We can say, yes, am I making profits, or am I making a loss in the business? Record keeping cannot be what overlooked in any business. So do yourself a big favor by joining the wagon. All right, let's quickly wrap up our class. So now, like I said earlier on, tracking your expenses and keeping your record is extremely important. It will help you know whether making profit or loss in your business. Are we together? Now, another benefit why you must keep record of your business is that it enables you plan for growth of the business. If, for instance, in the case of the first scenario, where the person was making a profit of 3.5 million naira, wow, that's a open sum of amount of money. If I'm a business owner, I would talk of planning and expansion. I will think of the next place to go. It's either I reinvest that money into that business. Are we together? Or I could look for somewhere else to open up another shop. Are we together? But don't be in a hurry to put up another shop. But the important thing that I've known that I'm making profit and I can now plan for growth and expansion. So it helps you plan for growth and expansion. You cannot be talking of growing and expanding your business if you're making loss in the first instance. But if you're making profit, you can say, okay, yes, this is the time for me to expand my business. I want to meet more customer base. I want to cover more areas. Are we together? I can now say, okay, let me improve my business. Let me expand my business. Are we together? So I'm able to make this decision. Why? Because I've kept what? Record. And I have seen that I'm making what? Profit. But if I have not kept record, and out of emotional happiness or emotional whatever, I say, no, I've been in this market for a long time. I think it's time for me to open another branch, another place. Meanwhile, I don't even know that I'm making profit or loss in the first branch. You now want to run and go open another branch. No, my brother, calm down. I say what? Calm down. Take it easy. Look at your business and say, this one I opened for, am I making profit? Because to run and open another one means to incur what? More expenses. Incur what? More expenses. You should start from step one and do step one very well and see you're making good profit before you now go to opening another branch. So don't be in a hurry to open branch two. When you have not done an analysis of the first one, you have not kept record of the first one, you only open more way for more losses possibly. Are we together? So you must keep records. Are we together? And then because I've kept record, I'm able to make what? Decision. Able to make what? Informed decision. I know, yes, I'm making profit so I can expand. Or no, I'm making loss. I should find a way to reduce my expenses, find a way to increase my sales. Are we together? If you cannot record, if I don't know whether I'm making profit or loss, I cannot make a decision. No. Like I've already said, making sales is not making what? Profit. Only accurate record keeping will help you know whether you should invest, whether you should grow, whether you should open another branch, whether you should reduce your expenses, only by accurate record keeping. Are we together? So it's very, very important, extremely important, that you keep record of all your transactions. You also issue receipt for every sale. It's going to help you track your inflows. Do you understand? Also and all this is going to help you reduce your unnecessary expenses. Are we together? So if you are running a small business, keeping a profit and loss account each month is extremely important. It will help you stay in control of your business and of your finances. Always record your expenses and income every day. Don't wait until end of the month or end of the year. No, you might forget them. My one now brothers, I love you all. Sometimes we forget. We're human beings, we forget. And that is why you must record it as it occurs instantly. Always keep your receipts and invoices organized. It is a proof of your transaction. It is what will guide you when you want to now record into your day book. Are we together? And then keep your profits and loss. Do it every month. and then look at it to see areas you need to improve. Are we together? You can see that making your profit and loss account is extremely simple. If this video has helped you, please give me a thumbs up because I've been talking since morning. I need something to chill my throat down. Do you agree? Say yeah, yeah. Everybody's supposed to say aye. The eyes have it. Please give the video a thumbs up. Share with others' business. Share with other small business owners. And subscribe for more easy accounting lesson every week. Remember, understanding your numbers is very key in growing your business successfully. I want to thank you so much for staying to the end of this video. I know you've had value for your time. Don't forget to subscribe, like, and share. See you in my next video. Bye. Bye.